Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Friday, October 5th, 2012. And here we are. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought in mind, let's take a look a bit at the week that was. And we saw that we had IDP employment this week, ISM manufacturing, and finally on Thursday morning we had jobless claims, which came in a little better than what was expected. We had factory orders, which were basically in line. And what we're looking at for Friday is we're looking at the employment numbers for the month of September, and we really don't know exactly where they're going to come out. We'll find out exactly where we're spending, whether we're hanging around that 8% level that we've been hanging at for quite some time now. Let's take a look and see what the SPX did the first 4 days of the week. We see that our overall trend is still continuing in an upward direction. We're trading in our trading range between the 30-day moving average and our diagonal. We see that as we came into Thursday and into Friday, that we are in an upcycle in the market as we're getting higher highs and higher lows. So we're in an upcycle in an uptrending market. Let's take a little closer look at the 4 days of this week. And we see that as we look at Monday, we saw that we had a big move up, and it wasn't able to maintain or hold that move. And there was some doubt on Tuesday whether we were going to go and pull back to that moving average. Then, as we saw, we came into Wednesday, we got higher high, higher low, and then finally on Thursday, you saw that we had this big move today, up 0.72%, up 10 points on the S&P, as we had the day after the huge debate. And so now we'll see what we're going to do on Friday, as it looks like we've gotten to the top of this trading range that we've spent time in for the last couple months, so at least for the last month. So let's see what we can expect as we go into Friday, as we look at some of our other indicators. It looks like the air could be getting a little thin here. We could maybe expect a gap up on Friday morning and then a bit of a pullback, as we might put in a bit of a topping signal here in the market. But nice move up on Thursday as we covered most of that range that we've currently been trading in. Air could be getting a little thin up there. How'd the Dow do relative to that? Well, we see that the Dow also is in a bit of an upcycle, but didn't reach quite the same level that the S&P did, as the Dow lagged a little bit relative to the S&P this week. It did have a good day on Thursday, is up 0.6% and up 80 points on the Dow. As you see, we are a bit away from that 30-day moving average. Next, let's take a look at the NASDAQ, see how the NASDAQ fared relative to the two other indices. And we see that the NASDAQ isn't showing that kind of strength, quite a way away from the recent high, and had a hard time breaking away from this 30-day moving average, as the NASDAQ didn't get as excited as the other two indexes did as we had the 4 days of this week. And certainly the debate could be part of what we're waiting for, but ultimately what we're waiting for is we're looking for earnings season next week, which begins with Alcoa on the 9th. Finally, the Russell 2000 traded in a sideways range and didn't give us any indication that it also wanted to head up, as we see the Russell 2000 trading sideways and basically going nowhere for the week to this point. All right, with that thought in mind, let's take a look at some of our other indexes that we have. We see the VIX pulling back as the market is pulling up, exactly the expectation we have for it, down at about 14.55. Certainly could pull a little bit back, a little bit further, if it goes down to its previous lows, which were there and there. All right, down about another point on the VIX is possible. All right, next let's take a look at bonds. We're looking at TLT. our 20-year Treasury bond fund, and we see that we went up and we touched that diagonal line that has acted as resistance for us, and we got a bit of a pullback as the market moved higher. So the bonds could be ready for a bit more of a pullback. It basically will depend what the overall market does. And so that's TLT, our ETF, for looking at the bond market. Next, let's take a look at the financial, which had a huge day today, up 1.48% for the day as the financials basically led the market up, showing good strength and on volume. So certainly a big plus for the overall market and the S&P. All right, so that was the XLF, our ETF for our financial sector. Next, let's take a look at oil, and we see that oil basically pulled back everything it gave away yesterday, and it recovered from yesterday's losses as it basically, oil bounced up about 4% in the pit trading today. Had a session low of 88.66 and eventually settled at 91.69, which was very close to the height of the day, as we saw oil move up strong as the tensions escalated between Turkey and Syria, and that's the kind of international news that can move the oil fund. All right, let's take a look at that safety haven, gold, and see what gold did on this day. And look at, we have a bit of a breakout, kind of closed above our previous range, and we see that when we look at that, let's erase that so we can see it. There we go. We look at that. Gold was up $1.20, or the GLD was, and up 0.7%. If we actually looked at gold itself, we see that it had a session high of $17.97, almost hitting that magic $1,800 an ounce level today. Did pull back a little bit as we into the close, but it basically pushed prices back up late in the afternoon as they focused on the ECB's decision to leave rates unchanged, and there was other things going out with the FOMC minutes. So flight to safety as we had a bit of a pop out in gold, almost getting to that $1,800 an ounce level. And finally, looking at our spider, we see that as we look at the SPY, what kind of volume did we have? Basically right around average volume, and so moving up, getting away from that 30-day moving average and following normal market cycles as we continue on and go into Friday. Look for the air to get a little thin. I wouldn't expect any big moves above this previous high on Friday as we go into the weekend. So for those of you that are gold members, stick around. We've got our stocks to watch. And for those of you that are not gold members and would like more free videos from Options University, go to www.optionsuniversity.com/free gold. And this is Butch Shorak, Options University. It's Friday, October 5th, 2012, and thanks for being here.